Real estate investment trusts are absolutely critical to filling in the gaps in your property investing strategy, but that REIT versus real estate debate isn't over. By the end of this video, you'll know why REIT stocks beat the market and the best new REIT investment for your portfolio. We're talking real estate investing today on Let's Talk Money. Joseph Hogue with the Let's Talk Money channel here on YouTube. I want to send a special shout out to everyone in the community. Thank you for taking a part of your day to be here. If you're not part of that community yet, just click on that little red subscribe button. It's free and you'll never miss an episode. If you've been following the channel, you know I'm a huge fan of real estate investing. I started my professional career as a commercial property analyst before managing my own property. No other asset has created as much family wealth as real estate, and I truly believe that everyone should have some exposure in their investments. That's why I'm so excited about this video, the first in a three-part series in partnership with Streetwise. I'm going to be talking about how real estate fits in your total wealth building strategy, how to get that exposure and an exciting new way to invest. Today, I'm going to show you exactly why you need real estate in your portfolio, how you can use it to create a stress-free strategy with returns that beat a simple stock bonds mix. We'll talk about some of those challenges in property investing and how I get the most out of my real estate exposure with dividends over 5% and without having to lift a finger. First though, I want to invite everyone in the community to share their real estate investing experience in the comments below. Have you ever invested in property? Was it residential or commercial? Was it a long-term strategy or something you flipped? Just scroll down and share your favorite real estate investment below in the comments. So one of the most common questions I get is that real estate versus stocks. Which is the better investment? And there's really two answers. First, the short answer is real estate, hands down. Real estate returns beat stocks in almost every time period. In fact, over the last 30 years through 2017, real estate provided an 1,800% return according to the NAREIT all-equity REITs. That's more than double the total return of 731% on the S&P 500. But not only are the returns higher, but real estate offers better protection against inflation. Over the last 30 years, the value of the dollar has been cut in half according to the BLS Consumer Price Index. Something you bought for $1 in 1987 now costs $2.16, including the price of real estate. But the other answer is why not have both, stocks and real estate? Combining real estate in a portfolio of stocks means you make money whether the stock market rises or not. In the mid-'80s, when the S&L crisis hit real estate, stock prices did really well. When the tech bust destroyed stocks in 2000, real estate was booming. This is going to mean that your wealth is going to grow steadily, not crashing with the market, and you're not going to freak out when it does. But those huge advantages in real estate run face first into reality for a lot of investors. Buying and managing property just isn't possible for a lot of people. Now sure, you might be able to manage one or two rentals, but own any more than that and it becomes a full-time job on top of your full-time job. It can also cost tens of thousands just for a down payment on one property. That means for a lot of investors, they'd have to sink their entire nest egg into real estate, and anyone that lived through the housing bust knows that's not a good idea. But there is one type of real estate investment that gives you the double-digit returns, all that exposure you need to real estate without the headaches and problems. You can start with less than $100 and get an investment in multiple properties all across the country and with professional management. So we're talking about real estate investment trusts, or REITs. A REIT is just an investment company that owns real estate and pays out the cash flow to investors. The company is managed by real estate professionals with all the staff and structure you'd expect from a major corporation. REITs get a special tax break from the government, so if they pay out most of their earnings to investors, they pay no corporate income tax. That means huge dividends for investors and less taxes lost to Uncle Sam. Now, one of the best parts is that listed REITs trade just like stocks on any investing platform. You can go into your online account or to any broker and buy a share of a company for usually less than $100. In fact, of the almost 200 REITs I follow, prices range from less than $1 a share to about $170 a share, with dividends as high as 13% a year. It used to be that the only REITs available to regular investors were those traded on the exchanges, while other funds were available only to the wealthy. Just over the last few years, though, we've seen the rise of online REITs and platforms like Streetwise that have opened up the opportunity to everyone. We're going to be talking more about these in a bit and over the next two videos. I've been investing in REITs for over a decade and just got into online REITs myself. For example, one of the exchange-traded REITs I own is Welltower, an owner of properties in the healthcare sector that pays a 5.5% dividend. Another one here is Extra Space Storage, which manages storage facilities. Now the dividend here is only 3.7%, which is still twice the cash return versus the rest of the market. And the shares have jumped 34% from where I bought them just a couple of years ago. But one of the problems I've always had with REITs is that they tend to be very large companies that need to reinvest in dozens of new properties a year. That kind of scale can actually work to their disadvantage. One, because the cost of running such a large company, but also because management doesn't have that much discretion in picking good deals. They have to reinvest all that cash. Another problem for listed REITs is that the stock price tends to be more like a stock rather than that smoother appreciation from real estate. For example, when the stock market lost 50% in 2008, REITs lost more than 60% of their value. Now, of course, real estate prices fell hard too. Actual property prices declined also, but it was more like 30%, so you have more risk in REITs. For these two reasons, I'm excited about that new type of real estate investment called the online REIT. Now, these are a lot like REITs, except online REITs are smaller portfolios of property with non-traded shares and most of the time higher dividend yields. Since online REITs are usually smaller than exchange-traded REITs, management can pick and choose the property in which they want to invest, and there isn't as much regulatory or operational expenses to be covered. A lot of times that's going to mean better flexibility to go after only the best properties and a higher cash return for investors. For example, the First Street Office REIT, managed by Streetwise, invests in high-quality office properties and as of the date of this video has paid a 10% annualized dividend. The fund is managed by seasoned real estate professionals that have acquired or managed over $5.5 billion in property and across all property types. So I'll leave a link to this online REIT in the video description below so you can get some more information and details. Because online REITs are longer-term investments, that share price of the investment or that's net asset value, it's not going to be as volatile as stocks or listed REITs. Against this, there is one disadvantage in that some online REITs are still only available to accredited investors, people with over $1 million net worth. Now, the Streetwise online REIT is open to all investors, but it's so far the exception rather than that rule. Now, I still own some listed REITs in my portfolio, but I'm diversifying into those online REITs as well. This three-pronged strategy of owning some properties but diversifying with REITs and online REITs gives me the best of all three. I get the pride of ownership from direct investing in properties, but also that diversification and the professional management of REITs and that higher cash return from online REITs. So I'm going to be going deeper into the detail of how you can use these online REITs to build a portfolio in our next video. Don't forget to tell us your favorite real estate investing experience in the comments below. We're here every Monday through Wednesday with the best on beating debt, making more money, and making your money work for you. So click subscribe to join the community. If you have a question about money or investing, scroll down and ask it in the comments, and we'll make sure we answer it in a future video.